Every time I am forced to use the fiat banking system, I think, oh my God, this is just terrible. Why do we still put up with this nonsense?
And we say Bitcoin fixes this a lot, probably even too much. But this is something Bitcoin truly does fix.
But what does that actually mean, and what does the future of banking look like in the 21st century with Bitcoin? So, with building 21st century banking, better, bolder Bitcoin, please welcome to the stage Max, CEO of Devify. Please give him a very warm welcome.
Thank you. Hello, everyone. It's been a long day. Hopefully, I'm going to be entertaining. My topic is building 21st century banking, better, bolder Bitcoin. So let's start. Okay. So I'm going to talk about how we can redefine and upgrade the modern banking system and make it a 21st century banking system. But first, we should probably dive into the history of the modern banking. Now, the modern banking system, as we know it today, was born in 14th century Italy. The Italian city-states of Florence, Genoa, and Venice emerged as the major financial centers of the 14th and 15th century. In fact, the word bank is coming from Italian word banca, which means bench. So benches were used as a makeshift desks or exchange counters during the Renaissance by Florentine bankers who used to make their transactions atop desk covered by the green tablecloth. Funny enough, the word bankrupt is actually literally means banca corrupta, which is broken bench. The Medici family of Florence, they actually established the famous Medici Bank, and they were instrumental in popularizing the double-entry bookkeeping system, which remains a cornerstone of the accounting and the modern financial system until this very end. But, however, although Italy kind of pioneered banking, there was another country which actually made banking famous and created the supercharged banking. So it was Switzerland. In 1815, during Congress of Vienna, Switzerland established a policy of neutrality, which is in fact became a cornerstone of Swiss banking success. I mean, amazing how much you can achieve by just minding your own business, right? The Swiss banking miracle has three main success factors, and these are predictability, neutrality, and privacy. Well, stability and predictability came as a result of neutral stance and a stable political system, while the privacy was a result of strict banking secrecy law that was passed in Switzerland in 1934. Thanks to all these factors, Switzerland was able to capture economical advantages such as stable currency, which is a Swiss franc, favorable regulatory framework. It still maintains a competitive and internationally aligned regulatory environment, and of course, certain level of modern innovations such as innovation in the digital space, wealth management, and etc. Now, Switzerland, being a small country, still holds first place in terms of preserving and storing a global wealth. 25% of the global wealth, cross-border wealth, is still stored within the Swiss banks. For such a small country, it's a huge achievement and a really, really great result. However, despite all the progress that was made since 14th century, there has been almost zero innovation on the core principles of banking. So in order to use the modern bank, you still need to trust them. And you need to use a centralized custody, which is not applicable probably by the most people sitting in this room. And as a Bitcoiners, we all know that trust sometimes doesn't work well. But I believe we shouldn't blame banks for this, because until the very beginning of 21st century, there wasn't any asset that would allow you to put less trust and avoid the centralized custody. Until 2009. That year, everything changed. What a lot of people initially marked as a tool that could make banks obsolete, in reality is a tool that can supercharge any institution out there. Bitcoin actually is the first asset that allows us to build systems, including custody systems, that actually require less trust and provide end users with more control. Bitcoin is a truly 21st century asset that can help banks finally advance in their development and build a fair and transparent products. In fact, Bitcoin is just like Switzerland. You know, it's neutral, even your enemies can use Bitcoin and you can't do anything about it. It's stable and predictable. You know, we know what the end number will be. And it's privacy oriented. So it has all the great options and features that Switzerland has. Thanks to Bitcoin, we actually now have a lot of different innovations that wasn't exist before Bitcoin was on the market. So it's blockchain tech, it's open 24/7, highly liquid, and it's actually first digital bearer asset. But there's more. What Bitcoin actually brought to the market and to the table is the first true form of collaborative custody, where keys are equally distributed between several parties. All parties have their own keys, and everyone needs to respect each other and negotiate if necessary. This tool is called multisig. And multisig is a digital escrow that can have multiple parties involved in that creation and management. With this approach, you don't need to trust a single party, as a single party doesn't have full control over this collaborative custody tool. Multisig, in fact, can significantly redefine how banks interact with their customers. Your bank is becoming less of the service provider and more of an equal partner. This is what basically we've been doing with our company since the inception. So we were bringing 40th century banking to the modern rails of sats and Bitcoin and creating an innovative project and product that could redefine how customers interact with the banks. And we believe that there's no better place than Lugano to kickstart this process, because this city brings Italian traditions, Swiss stability, and Bitcoin innovation. We believe that from here we can start building 21st century banking. And I'm happy to invite on stage Pascal from Sygnum Bank. Thank you.
Thank you, Max. All right. So it's basically Switzerland, banking, and Bitcoin that laid the foundation for what we are at Sygnum. It allowed us to establish the world's first bank for digital assets here in 2018. And so for us, Bitcoin comes in quite naturally. We kind of crossed the traditional banking sector with the future of finance, how we call it. But that's not every bank that is like that. And it's actually a bit of an evolutionary tale that I'm going to tell you here. If you look at Bitcoin adoption of banks, it looks very much like that. You do have a couple of these archetype banks that do not want to do anything with Bitcoin. Those bankers who literally think Bitcoin is a pet rock. The good news is they're slowly fading out. I think most banks today are already in the stage that they're actually so-called Bitcoin proxy banks. That means they don't offer Bitcoin directly, but they do offer Bitcoin through traditional instruments, so ETPs, ETFs, or Bitcoin proxy stocks. It's kind of the gateway drug, the Trojan horse, so to say, that injects orange blood cells into these old bodies. And over time, I do believe that most of these banks will also evolve to Bitcoin basics banks, meaning that they will really offer their clients to hold the real deal, the real Bitcoin. And then, of course, the final evolution stage is what we could call Bitcoin native banks, meaning those banks that are not just banking with Bitcoin, but that are banking based on Bitcoin and really use the Bitcoin native technology and advantages to create a better banking system. So basically banking for the 21st century. There's a couple of factors that explain why not all banks are there yet. And the reality is it's quite complex, and banks are very slow-moving institutions. At the very basic level, you do need regulation. If you don't have legal clarity on how Bitcoin is treated as an asset, no bank can touch it, because by definition, banks work in the regulated space. But even if you have regulatory clarity, you then need to build the technology in your bank to be able to deal with Bitcoin. And trust me, it's quite difficult for some banks to flip from regular trading hours to 24/7 tradable assets. On top of that, you need to build the processes as well that comes from the first line to compliance, to operations, risk, and many other areas that also needs the right talent that can deal with these new form of assets. And you also need the governance on top, so your risk exposure limits and everything. And speaking of the top, you obviously need a C-level, a management that understands Bitcoin, that grasps it, that also gives the strategic commitment to engage with it, and you need the support of shareholders and the BOD. So a myriad of things that need to be in place for banks to really be active and banking with Bitcoin. Now, the good news is that most of these factors are increasingly resolved. Regulatory uncertainty, we see it being removed mainly. I mean, we saw the ETFs in the US in 2024, now the Clarity Act that is being debated, or MiCAR in the EU. So those shows that many regulators around the world are starting to build the regulatory frameworks that will allow banks to work with Bitcoin. Secondly, the market infrastructure is there as well. We at Sygnum, we help more than 20 other banks to actually enable their clients to safely hold and trade with Bitcoin and digital assets. And then third, and not to be underestimated, the narrative is slowly changing too. So we now know that the financial circles start talking about the debasement trade or Bitcoin as the digital gold. I mean, that really tells us that the nothing stops this train has arrived in these circles as well. And so once a bank decides to adopt Bitcoin, we see that they typically do that in stages. First, they build a custody offering just to safekeep Bitcoin. Then they allow their clients to transact, so send in, send out through the blockchain. And then third, they start offering lending options. And lending is, in my eyes, a very interesting use case for that, because we as Bitcoiners know that Bitcoin is pristine collateral, and I'm very convinced that banks in time, they will realize that too. So of course, with Bitcoin, you have a 24/7 tradable asset with real-time valuation and high liquidity. It's clearly advantageous to physical goods. There's no geographical risk. Some criticism is always around the volatility, but even there, we see it decrease year over year. And if you actually compare Bitcoin's volatility, not just to a stock index or a basket, but to individual stocks or real estate, individual houses, then I would say that even Bitcoin's volatility is not as high anymore. And so lending against Bitcoin is not only interesting because Bitcoin is a really good collateral, it's also interesting because it allows new ways of lending. I would say that traditional lending was always based on trust. And there's like maybe 50 shades of grays, depending on which lender you go to, right? As a bank, you obviously have a very highly regulated lender. So, you can trust your bank. That's what people usually say. For instance, in Switzerland, as a bank, we always have to keep the client's assets segregated. So there's no commingling of assets, what we've seen with FTX. Or we cannot rehypothecate the collateral unless the client would sign up to that and explicitly give consent. But it still requires trust, right? You need to trust the bank, you need to trust the banking law, and you need to trust the regulator to enforce the law. And now, into Bitcoin, you have an asset that is basically backed by the largest computing network in the world, where we all know the credo, verify, don't trust, and where we know that code is the law. And so we have a new way of basically dealing with this asset, and also the custody doesn't have to be centralized anymore, but we can actually use decentralized custody, as Max alluded to earlier. And in particular, what you see here, and I see that the arrows are a bit weird, but in traditional lending, basically, you always have to give the collateral to the lender, because otherwise the lender wouldn't give you the funds. Now with Bitcoin, you can actually place the collateral, so to say, with multisig on chain and keep it there. And so it's kind of in an escrow, safeguarded, so that no one can unilaterally dispose over the collateral. This is simply something that was not possible before Bitcoin, and so it's a very, very interesting proposal that makes the lender and the borrower more secure. And so we were asking ourselves, what if we could build a regulated bank lending based on Bitcoin's decentralized nature? And that's when Debify and Signum started talking to ideating and how we could build such a product, basically. And enter multi-sig. Again, it should be on one line. But imagine if you're a bank client and you go to your bank and you say, hey, I have some Bitcoin, I would like to get a loan against the Bitcoin. And then you can just dispose them, put them basically into a multi-sig on-chain vault, and you will get your loan against it. It basically allows you that you hold your own keys. Of course, you don't have unilateral control over the whole collateral, but that's the point if you give them as collateral. But you do have your own keys. You can verify that your collateral is there on chain, so you don't just have to trust the Swiss bank that they don't rehypothecate because the guy on the stage says they don't do it. You can see it. Your Bitcoin are actually there. And you can put your Bitcoin to work. So if you want to buy a house, or let's say you want to mount your own speculative attack on fiat, via our guest, you can go ahead with that. You will also benefit of the competitive rates across currencies that a bank lender can offer. I guess Bitcoiners would say banks are closer to the money printer. And then you can also benefit from flexible drawdown schedule because our loans are structured basically like an overdraft account, so you can draw and pay back as you go. You also have open loan duration because it's really not nice if you have to repay during a bear market. And you also benefit of white glove service of a Swiss private bank. And so that's basically what we plan to build with multi-sig, and we really want to combine the best of Bitcoin with bank rate lending conditions. We're right now developing this product, and we will launch it in the first half of 2026. And so until then, I would say stay tuned. And if you zoom out again, what we will do is basically we will bring single-digit interest rates and multi-million loans into or to Bitcoin on-chain in multi-sig together with Debify and Signum. And just to conclude it, we stole this quote here. This is one small step for us, but it's a giant leap for Bitcoin because it really marks the beginning of 21st century banking, where we use Bitcoin native technology to make banking better. Thank you very much.